Hi, my name is Maria Clark. I am the Executive Director of NORTH, and I'm here today to talk about taxes for international students to give you some basic information, particularly focused for tax year 2025. So we're going to talk a little bit of an introduction, then go through a federal tax overview, and then talk about the free tax services and support our organization provides. So a little bit more about NORTH. We're a nonprofit whose mission is to provide tax services and tax education for those who are or were non-residents in the U.S. Generally, that means individuals here in the U.S. on an FJMRQ visas, as well as we support U.S. tax residents, citizens, and permanent residents. We operate free IRS FIDA tax clinics providing our services. We provide free software, tools, guides, and assistance by trained volunteers to help individuals file their returns. And we partner with organizations that bring those FJMQ visa holders here to the United States. And here's a little bit more about me and about our results from our tax clinics last year. So let's get into a federal tax overview. The first thing to know is that income taxes in the U.S. are very different than income taxes in pretty much every other country in the U.S. And let's talk about some of those differences here. So one of the first things to know is that taxes are done on a calendar year basis. So all of your income, all of your expenses from January 1st, 2025 through December 31st, 2025 is going to go onto a 2025 income tax return. And that's the income tax forms. It's called a return. Every calendar year is different. So you'll do a 2024 return for 2024 income and expenses using the rules and forms for that year. 2026 will be different as well when the time comes. You don't do a tax return for a specific job or a specific income document. And then you will partner with your school or the organization that works with you or that you work for. During the year, they will send you some documents after the year is done. Then you can come see us and you'll send those documents to the tax authority. And then after that, you will potentially have some information from them if needed, and you can get help from organizations such as an LITC or us. All right, so this is an income tax that we're talking about. So it's money coming into you. Some types of income are not taxed, but many of them are in the U.S. The more income you earn, generally the more that you're going to pay. And there are lots of special rules, which we're going to talk more about. When you purchase an item and you pay a tax, that is a sales tax. That is generally going to be charged automatically. And generally there are no forms that you have to fill out for this. And there's also no refund for those taxes, right? You just pay it. The only way to get a refund is to take whatever you purchased back to the store and return it. Taxes in the U.S. are an ongoing experiment in social engineering. So we've had about 100 years for the government to pass laws about who should pay taxes and how much they should pay in taxes. And over time, kind of various groups in the government have used taxes to encourage desired behavior. Get married, have some kids, right? We'll give you some money off your taxes. Buy a home, go to college, and so on and so on. So as different groups are in power, they will often modify the earlier rules or put new rules on top to encourage the changes they want to see in behavior. So this has resulted in a very complicated tax system. It also means that the taxes that you pay is also going to be very dependent on the details of your personal situation, right? Even if you and I had the same income, I might pay a very different amount of taxes than you based on the details of our personal lives. The other thing to know, right, is that different levels of government can have income tax systems. They can also have different income tax rules as well. So there's the federal government, the federal tax rules administered by the IRS, which is what we're going to talk about here. There can also be state income taxes. Not every state has an income tax, but most of them do. There also can be city and local income tax districts as well, which may have their own sets of rules also. And all of these organizations will have, if they have a set of rules, they're going to have some sort of a form that you're going to need to file to report and pay those income taxes. All right, so one of the next key things to know within the U.S. income tax system is that it is every person's individual responsibility to calculate and pay their own taxes. At the end of the year, right after that calendar year is done, You have to complete a tax form, an income tax return, to actually do the math to calculate your liability, how much tax you owe. You file your tax returns when you send those forms to the tax authorities to tell them what you've calculated. And you may need to do this even if you owe no taxes, even if you don't get a refund. You still have to tell them, here's the math, here was my situation, this is what I calculated. The next thing to know is that each taxpayer is ultimately responsible for the information on their tax returns. Most taxpayers and tax preparers are honest. They follow the rules. They do everything right, which is great. There have been some bad actors over time, and so the IRS has implemented rules and systems to try to address many of those situations. So sometimes the things that we do for taxes that are a pain or not very user-friendly, those are because somebody's been naughty in the past. Taxes in the US are a pay-as-you-receive-the-money throughout the year program, right? The government has bills just like we do. They need money to pay them, so they expect you to pay most of your taxes as you receive your income during the year. And the way they enforce this is that if you owe too much money at the end of the year, they will charge some interest and penalties because you didn't pay enough during the year. So there's a magic number, and if you owe more than that number, then you're going to pay a little bit extra. For the federal returns on the IRS, that number is $1,000. If you owe more than $1,000, you'll pay a little bit of interest and penalties generally. States have their own numbers. It's all going to vary a little bit. To try to help address this issue, whoever is giving you money, right, or who's paying you money, they can withhold some amount and say, not give it to you, but they'll send it to the tax authorities on your behalf. Generally, those organizations are only going to do that when they are required by law to do so. They're going to use various rules to figure out how much to take out. Sometimes it's a set amount. Other times they use some formulas, but it's always going to be an estimate, right? Because your personal situation is going to be different. So whatever they take out, they don't know all of the details about your situation. It can change over the course of the year. So it's an estimate of what they think you're going to owe, or based on whatever these rules are. Sometimes you can kind of give them some guidance about it. Say, hey, I know I'm going to owe some taxes, take a little bit extra out, or I got a huge refund last year. Can you please take out a little less? Other times you can also just send in money yourself. Gee, I know I'm going to owe a lot of tax. Like, here's $100. They'll kind of put that into the pot and they say, okay, yep, you paid this extra at the end of the year. Now you don't have to pay quite as much when you file your taxes. That's a really great way to make sure you don't have to pay any of those interest or penalties. When you file a tax return, you need a tax ID number, right? That is how the government identifies who you are, who these forms and all of this information belongs to. The type of number that you get is going to depend on your personal situation. If you're authorized to work in the US, you're going to be able to get a Social Security number. That's for things like on-campus employment or OPT, CPT. If you are going to receive US income, but you're not authorized to work, you'll have to get an ITIN number, or Individual Taxpayer Identification Number. We see this most often with people that have taxable scholarships and fellowships. That's not earned income, so no Social Security, but you still have to file a tax return. If you don't need to file a tax return, you cannot get a tax ID number. The IRS is only going to issue those numbers to people who need to file a tax return. So even if you want to get a credit card and the credit card numbers, people say you need to give us your Social Security, unfortunately, that is not a good enough reason by the IRS. They will not issue an ITIN number just to let you get a credit card. If you do need an ITIN number, though, please reach out to us. We'll be happy to walk you through the process. And if you are near where we're physically located, we can help do the paperwork to get that submitted for you. In general, the IRS is going to have a process of trust but verify. So when you file your return, they're going to initially take your word, right? When you file, you're signing under penalties of perjury that the return is true, correct, and complete. After you file, you're going to get a notice that the IRS accepts or rejects the return. That doesn't mean that they agree with it, though. That just basically means it passed the first round of checks, right? Does your name match your Social Security? Does it match your date of birth? Does the math on the form work, like all of the basic form rules? Are those all working properly? If all of that stuff is good, the return will get accepted, and then the IRS is going to process the return. They'll do some additional checks on your information. They'll check some of the income documents that you receive. Like when you get one, the company that gave it to you, they're going to send one to the IRS as well, right? This is those bad actors, so they match things up to make sure that you're reporting all of your income and all of the tax withheld that you've paid. If things don't match, or if they want additional information, they may send a letter to you. They do this a decent amount as well, just to verify your identity, right? They want to make sure that you really are who you say you are, that they're going to get that money to you as your refund. They're not going to send it to somebody who filed a fraudulent return using your tax ID number. When they finally send you that money, that's kind of the first point where you can say that, yep, the IRS has agreed with your return. Although they agreed with it, they can decide later on that they want to take another look at it. This usually doesn't happen right away. It's usually 2 or 3 years after the return is filed. But the IRS has up to 3 years to do this for any reason, right? The wind was cold today, we're going to take a look at your return. The IRS also can do this forever if they suspect fraud, that you are deliberately filing an incorrect return to get a larger refund than you're entitled to. So just know we want to make sure that the return is correct, and the IRS, if they send you a letter, look at it right away. It could be that they just want to make sure you are who you say you are before they give you your money back. So when we think about what can affect your U.S. income tax return, there's a very long list, but the short list for us today is going to start with federal tax residency status. So what set of tax rules you use is based on the residency status. Treaty benefits are also based on residency status as well. As is your marital status, that will affect your tax return. Your income, both how much income you have and what types of income you receive. Different types of income can get taxed at different rates. Where that money comes from, is it from somewhere here in the U.S.? Is it from somewhere outside of the U.S.? And then how do you spend your money, right? Do you support anybody? Do you pay for some loans, for some purchases? You're paying tax to other governments, qualified education expenses, all of those things can reduce your taxes. So let's talk about tax residency status. So if you are a U.S. citizen, you are automatically a U.S. tax resident. If you're not a U.S. citizen, then you are what the IRS calls an alien, just their technical term for it. A resident alien is somebody that is basically taxed as the U.S. citizen. You might still enjoy treaty benefits, although they're not very common, but you're going to follow all of the same general U.S. tax rules, which means you're going to pay U.S. tax on your worldwide income. A non-resident is subject to special rules. They have limited deductions and credits, but the good news is that they're only going to be taxed on their U.S. source income. So who is going to be a non-resident versus a resident? So citizens, automatically residents. Everybody else, we're going to check. Number 1, do you have a green card? If you do, then you are a permanent resident. You are a tax resident as well, kind of from the moment you got that green card forward. If you don't have a green card, then there is what's called the substantial presence test. It looks at how much time you physically spent in the U.S. during the past 3 years. And there's some math to kind of do some calculations about what that threshold number is to say, were you here long enough to meet this test or not? And this is a test that's applied every calendar year to determine tax residency. Some individuals are exempt from this test. We'll talk about that in just a moment. So if you meet that test, you're going to be a resident for the tax year. If you don't meet that test, you're going to be a non-resident for the tax year. If you are a non-resident, but you're married to a resident, you can choose to be treated as a resident for the entire year. There can be a few tax advantages of doing that. The other thing to remember, right, is that a resident for tax purposes is very separate from a resident for immigration purposes. So we're only talking tax purposes here for residents. All right, so let's talk about those people that are exempt from this residency test. So based on some visas, some individuals are not going to use or count the days that they're here towards that residency test, that substantial presence test. So those individuals are going to be students who are on an FJ, M, or Q visa for the first 5 calendar years they're here in the U.S. as a teacher, trainee, or student. Teachers or trainees on a J or Q non-student visas, they will be exempt from the residency test if they were not previously exempt for any part of 2 of the prior 6 calendar years. Family members on the -2 visas, they're going to use those same rules. So students will use that 5 years. Teachers, trainees will use that 2 out of 6 year. If you are an exempt individual, you don't count the days that you are in the US as an exempt individual towards the substantial presence test. So if you're here as a student on an F visa and you're exempt, you don't count those days that you're in the US on your F visa towards that residency test. Usually this is going to mean that you're a non-resident alien during the years of exemption, although it's not like by definition you're a non-resident, it's just the math usually works out to be a non-resident. Another very important thing to know, right? Being exempt from the residency test does not mean that you're exempt from paying taxes. It just means that you're going to use the non-resident tax rules to determine how much taxes you owe. All right, that test had a bunch of days, had a bunch of math. I'm happy to say that we have a tool that can make this a lot easier for you. It's an Am I a Non-Resident Alien tool. Basically, if you will enter your visa and your travel history, we will do the math for you to determine, are you a resident, are you a non-resident? You can use the QR code to get here. A couple of really important things to know. So number one, you can select your year that you're doing the math to calculate for. It'll automatically go based on the prior year. So right now, if you go in, it'll say, oh, let's do it for 2025, but you can do 24, 23, anytime in the past. You can also project forward as well if you're trying to figure out what's going to happen next year or the years after that. The other thing to know is that you do need to enter all of your travel history and visa history to make sure that the results are accurate, right? Some of those visas, like the F visa or the student visas, right, those are lifetime exemptions. So if you were here as a student, as a child, or as a -2, because your parents were here going to college, those years would count towards that 5-year number. So you need to make sure that you have all of your history entered on one kind of calculation, not just like 1 year or one visa. If you are not going to be a US tax resident, if you're a non-resident, that means you're going to be a tax resident of a different country. So that country determines your treaty benefits, so it's very important to understand what that country is. Usually it's pretty straightforward. It's just going to be where you were living before you came to the US, your home country, where your family is, where you went to school, where your passport is, your citizenship is. Most people, it's very straightforward. Occasionally, there'll be people where they were living or working for in some other country for an extended period of time, 6 months or more. In that case, your residency might have changed to a different country. Pardon me. All right, there is a very fancy thing called a dual status alien. Dual status aliens are individuals that are residents for part of the year and non-residents for part of the year. They have to follow special filing requirements. Most commonly, this occurs when somebody comes into the US and passes that substantial presence test during the first year, usually like an H-1B visa, possibly somebody here from graduate school that was here as an undergraduate, things like that. It can also be somebody that was an exempt individual that got a permanent resident status, right? They got a green card during the year. Or it could be somebody that was here as a student for a long time. Their 5 years were up, they became a resident, and then they leave the US and don't return. So anybody in this situation, their tax forms are much more complicated and complex, and they are out of scope for our program, all IRS FIDA programs. And they're going to need to find a professional to help them with their tax returns. So an individual that is an exempt individual has to file a Form 8843, even if they have no income. One of the special things about this form is that you don't actually need a Social Security number or an ITIN number to file this form. If you are filing it with a 1040-NR, you can e-file it. Otherwise, you're going to file it on paper. On our member site, we have an 884 only tool where you can answer a few extra questions in our personalized guide, and we'll help fill out that form for you. If you have income here in the United States, you have to file a Form 1040-NR. It must be filed by April 15th if you have taxable wages, and it can be e-filed in almost all situations. In the situations where it has to be paper filed, it gets sent to a special address. We've got the instructions for filing that out on our tax member website if you need them. All right, let's talk about the general tax equation. So as we look at trying to calculate your taxes, right, we start with income, all of the money coming in. We subtract adjustments, deductions, exemptions to find what's called taxable income. We take that times a tax rate to find out how much tax do we owe. We subtract credits, right? Buy a house, have some kids, we'll give you money off your taxes. Those things are credits that you can use to subtract. We can then subtract the payments that have already been made, right? The money that was withheld and sent to the government on your behalf, as well as money that you sent to the government directly. Find out at the end, right? This was my tax. Here's how much has already been paid. Do I get a refund or do I owe some additional tax? Right? So as we look at these terms again, just a little bit more, right? Money is income, is all money coming in. Adjustments reduces your income based on money that you have spent or saved, right? So if you spend it on certain things, you can subtract it from your income. Exemptions reduce your income based on people, basically family dependents. There are no exemptions for federal taxes anymore, but some states will have exemptions for dependents. Deductions reduce your money, reduce your income by a certain amount. The standard deduction is a set amount, but only students from India can use this. So not teachers or researchers from India and not individuals from any other countries. That's just their treaty benefits, their treaty agreement with the US has that provision. Everyone else, you itemize your deductions, which means you, again, reduce your income based on money that you have spent on certain things. You take it times the tax rate. When you find your taxable income, the percentage of your tax that's paid, and it's a progressive tax, which means as you earn more money, you will pay a higher percent in tax. It starts at 10% and kind of goes up from there. Credits can reduce the amount of tax you owe. Some only go down to zero, but some actually will give you money back. Those are called refundable credits. Withholding is money that's taken out of your income and sent to the tax authorities, right? This is very important that it's not sent by you, right? Whoever was paying you, they sent that money to the government on your behalf. If you send money to the government because you know you're going to owe some money in taxes, that's called estimated payments. All right, so when we do our calculation for taxes, for non-residents, you're only going to pay tax on your U.S. income. But you do have to file a tax return if you have any amount of taxable income. As soon as you have that first dollar, you got to file a tax return. If you are married in your home country, you are still married when you come here to the United States, and so you must file using the married filing separate status. Married non-residents cannot file a joint return, but they also cannot say they are single, right? Married means married, no matter who or where your spouse is. Wages that you receive are going to be taxed. Sometimes a treaty may exempt them. Usually it's going to be an unlimited amount for teachers or researchers. It can be a small set amount for students. And the forms that the wages are reported on are typically the W-2 and or the 1042-S form. But the form that you receive is not as important as the fact that it's a wage income and you have a treaty. You can still claim that treaty no matter which form your income is reported on. For a scholarship, if it is for tuition, required books, or fees, it's going to be tax-free for everyone, residents, non-residents, everyone. If it is for other things like room and board, living expenses, travel, it's going to be taxable for most people, but for everybody that has a treaty, you may be able to exempt it from tax. So for other things, treaties may exempt, but everything else is going to be taxable. If you are self-employed, if you have your own business, you may receive a 1099 NEC or 1099 miscellaneous. The IRS has determined that that is out of scope for the VITA program for non-residents, so we can't help you, although we've got some reference information that we can send you to kind of help you through that on your own. If you have investment income, that is going to be taxable here in the US as well if it's a US-based like brokerage account, it is generally taxed at 30%, so it's a pretty high tax rate. Sometimes there can be some treaties that lower rates, but it gets pretty complicated. It's reported in a separate spot in the 1040 NR. It's not reported on like the standard place where residents report it. It's reported at the end on a separate form, and again, 30% rate. Bank interest. So, if you open a bank account and you have some money and you earn some interest on those deposits, that actually, there's a cool thing for non-residents. It is not taxable and not reported. It's called excluded is the official term for it. So if you have bank interest, you don't have to pay any tax on it. However, if you have cryptocurrency or other digital asset sales or exchanges, that is still definitely income. You do have to report it, but it is also out of scope for IRS FIDA Clinic. So we can, again, point you to some resources, but we can't help you do that piece of it. All right, I talked about this briefly, but for deductions, right, students from India can take the standard deduction, a set amount. Everyone else has to itemize, so you can subtract from your income the amounts that you pay to state or local governments as income taxes. If you did this last year and then you got a state tax refund, the refund is going to be taxable, right? If you subtracted it, you didn't pay tax on it the year before, but then you got some part of that tax back, you got to pay tax on that first part because you never paid tax last year. Likewise, if you made a contribution to a U.S. charitable organization, you can also subtract that as an itemized deduction. Non-residents, unfortunately, get very few credits on their tax returns, and there are absolutely no education credits. That Form 1098T, if you received one from your college or university, that is intended to help residents claim those education credits. Since non-residents can't do that, you can basically just ignore that form. You're not going to need to use it for anything. All right, just a couple words on residents versus non-residents, right? Main thing here is the US government, right? It wants your money. So if you are a citizen or a permanent resident, you are going to pay US tax on your worldwide income. Likewise, if you're a tax resident, even if you're not a citizen or a green card holder, you're going to also pay US tax on your worldwide income. So no matter where that money is coming from, the US government wants their piece of it. If you're a non-resident, you only pay US tax on US income. So it's a little bit simpler from that perspective. Likewise, there have been a few naughty folks in the past 100 years who have put money in places like Swiss bank accounts so they wouldn't have to pay taxes on that. And as a result of that, all citizens, permanent residents, and tax residents must also report their worldwide financial assets. So you say, yes, I'm fabulous, I have $1,000 in a Swiss bank account. You don't pay tax on it, you just say, hey, it's out there. Of course, the IRS would probably say, oh, you have, $1 million out there. You should probably have some interest income or something like that on it. But it's really just, hey, you've got this money out there. It's just a report of it. Tax non-residents don't have to report this, but there are some pretty significant penalties for not reporting. So if and when you become a resident, make sure you do those things. All right, so I talked about how 100 years of social engineering. We've had another year of social engineering that happened in 2025. There was a new law that was passed, the One Big Beautiful Bill Act, that resulted in some tax law changes. These probably won't affect many international students, but I'm going to mention them briefly just in case it affects you. That way we can look for it and you can try to include that on your return if it applies. So the first one is overtime. It was advertised as no tax on overtime. The reality of it is not quite that good. It's basically a reduction of the overtime amount that you pay on tax you pay on overtime premium. So only certain types of overtime apply. Basically, if you're working more than 40 hours in 1 week, that point happens, your employer is required to pay you 1.5 times your regular rate of pay. That 0.5, that extra, is what's called the overtime premium, and that overtime premium can be deducted. The hard part is that this change was put into place without getting the income documents like the W-2s updated. So if this applies to you, you're going to need to get some information from your employer to be able to do the proper calculations on this. Now, employers will pay overtime, like more than 1.5 times, right? If you're maybe work a holiday or something like that, or if you have a different calendar of what your schedule is for working, but it's only that more than 40 hours, the 1.5, that 0.5 times premium that gets counted here. If you work in a profession that normally receives tip income, and there is a list out there of typical professions that get that type of income, you may be able to deduct qualifying tips. So this is only voluntary cash or charge tips. It's not including mandatory charges that customers have to pay, such as like for a party of more than 8 people or something like that. Qualifying tips must be reported on an income document, W-2, 1099, or Form 4137. Again, probably not very common, but if it does, know that it's out there and you can work through that process. Likewise, if you purchased a new car and that car was assembled here in the United States and you have a car loan, the loan interest on that may be deductible if that vehicle was purchased for personal use. There's information again that you're going to need. You're going to need your vehicle identification number to look up to confirm that it qualifies for that deduction, and then you should get a statement from your lender showing the amount of interest you paid. So 3 changes that may possibly affect your taxes, although I'm not sure how many of those will apply to international students. All right, the next thing on this is federal tax overview for FICA taxes, which are Social Security and Medicare taxes. So non-residents on the -1, F1, and J1 visas do not pay Social Security and Medicare taxes. If you are here long enough to become a resident alien, you will pay those taxes. If you are here on a -2 visa, it doesn't matter if you are a resident or a non-resident, you will pay those Social Security and Medicare taxes. Usually universities are really good about not taking those taxes out unless you're required to pay them. But if you go work for a different employer, they may not know the rules about international students. They may not be quite as up to speed on that. So if you worked for somebody and they took out those taxes and you think that they shouldn't have, we can help you get a refund. The forms 843 and 8316 are there, which are what's used. This is entirely separate from your income tax return. It's completely different. It doesn't need to be done on the same time schedule. We can also help you with this as well. Generally, we help with this after the filing season, but you can send us an email. We'll fit you in earlier if we can. Otherwise, we'll help you afterwards to get this money back. One other change that's been implemented starting in September of this past year or October of this past year is that the IRS is starting to end sending out refunds by paper check. So if you are due a refund or when you file your tax return, you can input your information about your U.S. financial institution bank account on the tax return forms so that your refund can be automatically deposited into that account. If you don't have a bank account here in the United States, what's going to happen to you? So your money is going to be delayed, basically, is what will happen. So the first thing will happen is that they'll take your return. That'll all be great. But then they'll get to the end and they'll say, oh, you don't have a bank account. And they will send you a letter, a paper letter, saying, hey, you didn't have any bank information in there. Please give us your bank information within 30 days. We believe that there is not going to be a requirement to file a form to request an exception, that you're going to just be able to not do anything, but you're going to have to wait. So they'll send you a letter saying, hey, give us your bank account. If you don't respond to them after theoretically 6 weeks, the IRS will go ahead and send you a paper check in the mail. This is an entirely new process. We can't really provide any guidance about how well this works. Personally, I suspect that it's going to probably take a while. I don't think it's going to be like you file and then 6 weeks later the check arrives. I think it's going to be more likely you file and then 2, 3, 4 months down the road, a paper check finally appears. So we are encouraging everybody to try to have an account that they can use for direct deposit when they file their taxes. So there are a lot of different options here. A savings or checking account from a traditional bank is a great one because there's a lot of regulatory oversight for those financial institutions. Many prepaid debit cards or payment apps also will have bank account direct deposit information that you can use to enter into the tax return as well. Whoever you have your account with, you can get your routing and account numbers from them. We'll also put together some options and have those out on the member website for everybody to look at to try to find something that will work for them. So, but we strongly encourage you. Your money's gonna be late if you don't have a bank account. So please try to get something in place as soon as you can so that it's ready to go to receive your refund. All right, state taxes. I'm not going to talk about any of this right now. That's going to basically be for you to look. We'll have, if your site that you're looking at is a site in a state that has state taxes, we should put out a state tax orientation just like this that kind of covers the state specific rules. If you're in a state that doesn't have taxes, don't need to worry about it. That'll be great. All right, so now we're going to talk about just the tax services that we offer. So I'm going to talk about the North International Tax Clinic. If we are partnering with your school, it'll be like North and Your School International Tax Clinic. So we are an IRS VITA FSA clinic, which is a whole lot of letters. So VITA stands for Volunteer Income Tax Assistance, which basically means that the people that we train volunteers to help assist you with doing your tax returns. And so the people that help you, they are not paid, right? They are volunteer. They are helping out of the kindness of their own hearts. We are what's called an FSA clinic, which is called Facilitated Self-Assistance. This is the IRS fancy words for DIY plus help. So you're going to do it, the DIY, we're going to help. It is free. It's always free. We will never charge. Tax preparation and support for those who are in scope. Our criteria for service is that you have to have a school, nonprofit, or government email address. So usually .edu, .org, .gov, but all kinds of other endings count. It's not based on like what the email ends in. It's based on being a school, nonprofit, etc. We support everybody there, non-residents, residents, citizens, nationals, permanent residents. We would love to help you all. There is a hard income limit. The software has a limit. If your income is above 89,000, it will not prepare your returns. It will let you put things in, but then when you get to the end, it'll say, oh, we can't help you. So if you're close to that, please double check it. Make sure that you're going to be under that amount. There are some types of income that are out of scope in some types of tax situations, such as dual status aliens, cryptocurrency, and others. If you are out of scope, that means that we can't help you. Sometimes the software will be able to still prepare your return. So like for cryptocurrency, we can't tell you what to do, but the software will do it, and we can point you to the IRS website that walks you through what needs to be done. Other times for like a dual status tax return, the software doesn't really handle it. It's out of scope. We're going to just say, hey, you're going to need to find some other option. Same for the income limits. Sorry, it's a software thing. We can't fix or change that. All right, what do we provide? So we provide 24/7 access to the software online. You can file your federal and state returns. The software will prepare and file all state returns in the United States. So if that state has income taxes, it will do the state tax return for them. It can generally e-file both the federal and state. Sometimes there are some limitations with filing federal, not very many federal, but sometimes there are some state limitations where you can't file electronically the accompanying state return, but usually both federal and state can be filed together. We have tools. Am I a non-resident alien? We also have another tool to look at treaty benefits to see if you have any treaty benefits. And then we have detailed guides, so our personalized guide, which basically has kind of a step-by-step PDF to walk you through doing your tax return in the software. So you enter some information, you enter your visa history, all of that kind of stuff, answer some questions, and then it'll show you like literally as you go how to do that. We will have a demonstration of the 2025 software and personalized guide process out on the Do Your Taxes page. It's not quite up there yet, but look for it there. That's a really good way to see like how this is supposed to work. We also have an 8843 only option in the personalized guide. So if you're doing your guide and then you say, oh, I don't have any US income, if you need to file an 8843, the guide will ask you, hey, you need to file this form. Would you like us to help you, or do you want to kind of do it on your own? Then if you want us to help you, we'll ask you a few more questions and then help print it out so you can mail it in. We also provide individual support. So we have IRS trained and certified volunteers. We will have tax clinics, which is appointment-based support based on the agreement we have with your school. Those sometimes can be in person or remote. We do limit those to one appointment per individual per tax year. So it's a 90-minute appointment. That's basically enough time for you to file your taxes out and get them completed. We also have office hours appointments that are available to all of our members. They're only remote. They're 20 minutes appointments, so one-on-one with a volunteer. You get one appointment per day, so you can do multiple days if you need to. Generally, most people don't need more than one or two, but if you have more questions, that's an easy way to get answers. The best way, though, to get answers if you have questions is actually just send us an email. We can answer almost all of the questions. We might refer you back to your personalized guide or make sure that that was done properly, because there's a lot of really good support in those. The one thing that we can't really do on emails, where we do refer back to like the office hours, is that we can't review a completed return, right? We always encourage our clients, our taxpayers, hey, let us come take a look at it, make sure everything is right. And that office hours appointment is like designed to do that for you. So if you want somebody to look at it before you send it in, set up an office hours appointment. We would love to help you with that. So how does this work, right? How do you get this help? So easy thing, request your membership. This is our website, go there. If your school is on our list, it's all alphabetical, so you might have to scroll down a little bit. But if your school's on the list, pick that one. If not, General North email membership. Make sure when you sign up, you use your school, nonprofit, or government email account. Things are automatically approved, but then we will go back and cancel you if you use like a Gmail or Hotmail or iCloud or anything like that. In that set, once you get your membership, that gives you access to a set of website pages. The first page is Learn. So if you are a first-time filer, we recommend going there. This video is out on that page. Hopefully you've already found it. The next page is Get Ready. Gather all your income documents. The page talks about kind of like what all of these income documents are and has more details about scope as well. The third page is Do Your Taxes. That has the buttons for the personalized guide, so you can create that. It also has the button for the TaxSlayer software. So you must use that button on your Do Your Taxes page to get the free software. If you just go straight to the TaxSlayer website and you start there, your return is not going to be free. Like, we can fix it, but it basically involves deleting that return and starting over again. So make it easy for yourself. Click on the link in the Do Your Taxes page to create your account, and you'll be good to go. And then if you need help, the Get Assistance page or Get Help page shows the email and all of the different options for support that we have available to you. And that's where the email support address is. So if you need help, look on that page to see where to send an email for help. All right, I'm going to strongly encourage everybody to go watch the personalized guide and TaxSlayer demo, right? You'll see me create a personalized guide. You'll see me use that guide in TaxSlayer to prepare a typical international student return. And with that, thank you so much for watching. I hope this was helpful, and I look forward to seeing you at a tax clinic or event soon. Goodbye.